What is an expense ratio? The expense ratio is the fee that mutual funds or exchange traded funds charge investors to cover their operating expenses. The fee is going to be deducted from your investment, essentially reducing your returns each year. So let's say, for example, an individual invested $1,000 each and every year for 30 years, and they earned 6%, and the expense ratio was 0.2%. You fast forward at the end of 30 years, that investor would have earned almost $82,000, and then they would have spent about $3,000 on the expense ratio. Typically, investors are going to look for funds that offer lower expense ratios, since higher expense ratios tend to take a substantial bite out of their long-term returns, which ultimately affects the investor's financial plan. The Securities and Exchange Commission requires that funds are going to publish their expense ratios in a public document known as prospectus. The prospectus reports information that would be important to mutual fund and ETF investors. Things like the investment objective, who the fund managers are, expense ratio, things like that are included. Online brokers often also allow you to look up the expense ratios for individual funds, and then they may even offer tools that allow you to quickly compare ratios across different funds in the same category. Ultimately, expense ratios are just one of the many different factors to consider when you're deciding which mutual fund or ETF would be appropriate for you.